Lenders 20 questions on pass-throughs and K1s, video number 6. What are some of the red flags in a pass-through entity, 1120S or a 1065? Well, actually, they're the same as in all business returns, including the corporate 1120 and the scheduled CRF in a 1040. So I'll give you 5 of my favorites. One is equipment lists that just don't make sense. An airplane on the equipment list of a photography studio? I'm not sure about that, but if it turns out the company is an aerial photographer, all of a sudden the airplane does make sense. So I don't make assumptions. I ask if the equipment list just doesn't seem to jive with what I think it is that they do. Another is if the taxes are too low. Just to cover payroll taxes, we need to have at least 10% of wages. So I always do that quick check and be sure they're paying payroll taxes before I consider lending them money. Now, third is a significant drop in a discretionary expense. I'll use repairs and maintenance as an example. I've got 2 or 3 years tax returns. If repairs and maintenance takes a nosedive, well, I'd like to see that maybe they've replaced older equipment and therefore don't have as much in the area of repairs and maintenance. Or maybe if the business has had a bit of a challenge recently, perhaps they took some of their workforce and rather than laying them off, had them do more repairs and maintenance, which either reduced the amount they were paying to outside repair and maintenance contractors, or got everything in such good shape that the next year they didn't have as much maintenance to do. Because the other possibility is the business is in trouble and they're actually deferring maintenance, needed maintenance and repairs because they just can't afford it. That I'd like to notice. The fourth of my favorite is inadequate insurance. And it's true that when you look at any business return, you may not know what the insurance amount should be for that specific kind of business, but you might recognize that it seems low, and you certainly will notice, if you look, that it's not there at all. So I want to be sure that this company seems to be adequately insured. And if it's dropped dramatically within the last period of time, I would like to know why they have a lowered need for insurance. And then finally, I'd watch for inconsistencies. Inconsistencies one tax return to another, or even inconsistencies between the different documents like tax returns, financial statements, appraisals, and what they're saying to me. Best practice is to actually get a mental snapshot of that business before you jump in. Take a look at how long it's been in business. What kind of business are they in? How many people work there? What's the overall revenue? And maybe what's the overall inventory levels? Once you have a mental picture, now as you're going through these tax returns, grabbing the numbers you need for your software or Excel spreadsheet, you also can be glancing at the others and you just keep saying to yourself, do these numbers make sense for my mental picture of this business? You also have at least 2, possibly 3 years tax returns, and so you can sort of compare back and forth. And that's another way you'll spot those inconsistencies or drops in expenses that just don't make sense. Here's a good idea. Don't lend to businesses that you just don't understand. So when you spot red flags, until you understand and resolve them, you're not ready to make a loan to this company. If you enjoyed this information and you would like to receive all 20 free videos of the top questions lenders ask and should ask about business, personal, and global cash flow from pass-through entities, along with a copy of my tax return analysis quick reference guide, visit the URL on your screen.